You ever see something that just makes no sense at all? A day where everything feels upside down and good news? Well, it somehow becomes bad news. That's pretty much exactly what happened in the stock market. So go ahead and grab your detective hat, because today we're going to crack this case wide open. So, here it is. This is the central mystery we're diving into. Think of it like a classic whodunit, right? But instead of a crime scene, we've got the stock market ticker. We're going to play detective, follow the clues, and figure out exactly why the market went totally haywire.
So get this, on November 20th, 2025, the AI giant Nvidia reported just knockout earnings. I mean, the results blew past all expectations. Their CEO even said sales were off the charts. You'd think that would send the market soaring, right? Wrong. Instead, the market completely tanked. The Nasdaq, the S&P 500, both fell and fell hard. It makes absolutely no sense. So what on earth was really going on?
Yeah, so clearly, that big headline about Nvidia wasn't the whole story. Not even close. To get to the bottom of this, we've got to widen our investigation. We need to look past that one shiny piece of news and hunt for the hidden clues that tell us what actually happened that day.
Okay, so our first clue, it comes from the broader economy. Think about it like this. A single company doing great, that's like one student acing a test. But investors, they care about how the entire class is doing. And to figure that out, they look at something called fundamental indicators.
And honestly, that's the best way to think about these fundamental indicators. They're literally a report card for the whole economy. They give us the grades on major sectors and tell us which way the big economic winds are blowing.
And what are the key subjects on that report card? Well, you've got the big ones: employment, inflation, consumer spending, and the housing market. Each one of these gives us a vital piece of the puzzle about the country's economic health.
Now, on the exact same day as our mystery, a new jobs report was released. And this is where things get really tricky, because the report was just a classic case of mixed signals. Some good news and some bad news, all hitting at the very same time.
Okay, first up, the good news. The number of jobs added to the economy, what all the analysts call non-farm payrolls, was way, way higher than anyone expected. Now, on the surface, this is fantastic, right? It suggests a really strong, growing economy.
But here's the twist. At the same time, the overall unemployment rate actually went up unexpectedly to 4.4%. So wait a minute, how come the economy add a ton of new jobs while the unemployment rate is also rising? Well, it could mean more people are jumping back into the workforce but aren't finding jobs right away, and that's a potential sign of some hidden weakness. This contradiction created a whole lot of uncertainty, and that's our clue number one, a really confusing economic picture.
All right, time for our second clue. Now, this one isn't about the broad economy. It's about the market's own internal health. We're going from checking the report card to, taking the market's pulse. And this involves something called technical analysis.
I know. Technical analysis sounds super complicated, but the core idea is actually pretty simple. Analysts just look at charts of past price movements to try and figure out the market's mood. Are investors feeling optimistic and ready to buy, or are they feeling fearful and ready to sell? It's really just like a doctor checking a patient's vital signs to see if they're healthy or starting to get weak.
And one of the most common vital signs they check is the moving average. See these lines on the chart? They just smooth out all the daily noise and show us the real underlying trend. The 50-day moving average, that specific one, is a really important support level. If prices fall below it, it's like a big red flag for traders, signaling that the market's upward momentum might be breaking.
And this brings us to a huge piece of evidence. On the day of our mystery, the S&P 500 did exactly that. It broke below that critical 50-day moving average for the first time in 139 days. That's over 4 months. So this tells us that even before the Nvidia news hit, the market was already showing signs of sickness. The mood was already turning sour.
Okay, we've gathered our clues. We've got the confusing economic report card, and we've got the market's weak pulse. Now it's time to put it all together on our evidence board and solve this thing once and for all.
Just look at this. The evidence board tells the whole story. Over in the good news column, we have one very powerful item, Nvidia's incredible earnings. But then, look at the bad news column. It's just overflowing. We had that surprise jump in unemployment. We had some chatter stirring up inflation fears. We had big-name investors warning about an AI bubble. And we had that critical breakdown in the market's trend. So the verdict is in. The market didn't crash because of Nvidia's good news. It crashed in spite of it. There was a massive tidal wave of economic fear and negative momentum, and that one lonely island of good news just got completely swamped.
So, now that we've solved the case, what does all this mean for you? Well, this whole investigation gives us a really powerful toolkit for understanding the market. It's all about learning to read the news like a pro.
Here's a super simple checklist you can use every single day. Step 1. Always look beyond the big, flashy headline. Ask yourself, what else is happening? Step 2. Check the economy's report card. Are those big fundamental indicators looking healthy? And Step 3. Gauge the market's mood. Is the overall trend strong, or is it showing some cracks?
Because at the end of the day, the market is this complex, fascinating story that's unfolding fresh every single day. And now you've got the tools to be a better detective. So the real question for you is, what clues will you be looking for tomorrow?